still, or are we tired of him? Now he's obviously front and center, still dealing with the I secured funding for Tesla tweet way back when.
Yeah, look, I mean, we've talked about that noise that we believe took off, at a minimum $60 to $70 on the stock. But now cutting prices, that's a strategic poker move that we love. I think volume is going to increase going into 2023 based on where the street was even a few weeks ago. And I think the China story on those price cuts, I think that could really start to recover. And I view Tesla as, in our opinion, along with Apple, most transformational companies in the market, period. Musk, you're starting to see maybe a different tone so far that we've seen over the last month. And that's also why the stock's up significantly from its lows, despite what's clearly some demand issues starting to, they're facing globally.
And I have bears that come on and say, look, Tesla was Tesla, but now they're losing market share. The competition has been increasing. It's not the same game anymore. The stock is so heavily overvalued, particularly when you look at other automakers, which Tesla is more than just an automaker. But even seeing its fair value closer to $22 than $200. What do you say to those naysayers?
I think if they're NFL scouts, they would have been negative on Tom Brady coming out 6th round out of the Michigan, right? I mean, the point is, they hate it at $10 billion, hate it at $1 trillion. They're going to hate it at $400 billion. I just view it as, this is not an auto company. It's a transformative, disruptive tech company. And obviously a lot of this has sort of been Musk Twitter driven the last year. But I believe now you start to see a much different narrative in 2023. But look, the haters are going to continue to hate in Tesla.
Thanks for joining us once again. Today's show focuses on the fact that there's some negative analyst reports on Tesla, and at the same time the stock price is rising nicely, and I believe it could actually double by the end of next week. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support is greatly appreciated and makes all the difference in the viability of the channel. So I decided to choose sort of 3 different clips today. The first one, as you saw, is a New York Times piece regarding lowering prices and how this helps Tesla address compatibility with the $7,500 tax credit. So in the best case example, a $3,000 cut on the price or base price of the Model 3, if you combine the $7,500 tax credit, that's about a $10,000 cut in price. So obviously this is significant because every $10,000 drop in price, I believe the number is a 20% increase in the number of buyers that can now viably look at purchasing in that space. In addition, what Elon pointed out is that the hike in interest rates, because 80%-ish of all vehicles are financed, is significant because buyers are hit with those higher prices and therefore can't fit the cost of those vehicles into those new levels. So I wanted to further note that Guggenheim had chosen to downgrade Tesla on the 13th of January. And to some extent, you could say that Guggenheim downgrade is valid because if you simply extrapolate the price reductions across the expected sales for the year, net earnings end up being around 320 versus 420, and therefore that constitutes reasons why one might want to downgrade just on that straight line number. The challenge though, and so that's sort of the general headlines that we're working on for this show and for what to expect in terms of investments and process going forward next week. The huge question and why I think price probably doubles in the next couple of weeks is the fact that $3,000 represents a a hit to Tesla's margins because you don't have that profit. But the other issue with that, though, is that Tesla is actually lowering its costs over time. And if Elon comes back and articulates the fact that it's a minor impact on margins to have those costs, those price reductions, I think it's going to be huge for the stock, which is, I think, where we're going. So there are a number of other firms. They're hunting for lithium at decent prices. Tesla's mine strategy is working for inventory at good prices versus spot market buying at small scale. One example that's blatantly out there is that Rivian is building cars because of high lithium prices at about $150K per vehicle, but selling them for about $85,000 per vehicle. So there's a lot of loss leader activity going on, particularly for startups, but also for large firms, because they have ICE vehicles that are consuming cash that they can use to fund losses in EVs. The second issue is that as Tesla's prices drop, you also have this factor that there are a lot of folks that still have range anxiety as they move into EVs. And, that's even a crazy statement because some incredible number, like 20 or 25% of the buyers of Teslas are actually folks that have moved over from the Nissan Leaf or other vehicles that don't have the charging infrastructure or range that Tesla has because of the charging infrastructure. So there's this phenomenon that if in fact Tesla is rolling it at that lower price and you add on the tax credit, you now have a situation where Tesla has perhaps increased its potential buying population by 20 to 30%. So the initial blush by analysts of let's downgrade the stock or let's get out of it because of the price reduction kind of doesn't make sense, because what you end up is that Tesla now ends up with shortages of the number of vehicles available, so sales actually spike. And there's no significant, if there is no significant impact on margins, then you just have more sales with about the same margins. And, it's a win-win for Tesla in both departments. The problem with what Elon has chosen to do is that there are a large number of competitors that were relying on Tesla's pricing policies to create an umbrella for them to come in with lower priced vehicles. And once Tesla's price swung down in this fashion, you definitely have an expanding marketplace for the number of people that can afford the car, but you also have the problem of those relying on that lower price tier to go after Tesla, not creating the opportunity that they once had. So now you have an interesting deal where those firms have to either lower their prices and therefore take on more losses because they don't have Tesla's scale for buying parts, etc. And so we now have an interesting situation where those firms have to figure out how much money they want to lose as they chase Tesla. And if Elon is increasing those prices and they're maintained, it's a complete disaster. One angle on all of this that I did not look at heavily was just the fact that as variable rates have increased on cars, there are a lot of people who had a certain number they could afford, and this potentially puts the economy in jeopardy as a lot of people get foreclosed on their vehicles as their cost of vehicle ownership rises. So overall, I would say that we're in a, I think, great situation for Tesla. once we know during the conference call next week what the margins are after the price reduction, I think that's the key. If the margins are still okay, all the analysts that might have downgraded or thought about downgraded are going to have to upgrade. And I believe the combination of that upgrade and the increasing sales of Tesla, and then you bolt on the impact of new sales when it comes to the semi as well as the Cybertruck, all of this gives a forward picture of Tesla that is blazingly terrific, even if the current picture based on last quarter's numbers are not fantastic. So my humble forecast is I think that we could sniff $200 a share by the beginning of February, and it's somewhat of a recovery rally for Tesla, given all the elements of what I just described. So stay tuned. I think we're in for a wild period, and you can really feel the disagreement in the value of the company that's going on right now, because obviously there are certain analysts that are downgrading, and there are certain analysts that are upgrading at the same time. And once it's figured out which direction is appropriate, I think we end up with a Tesla boom upward, and long-term holders are rewarded in the process. At any rate, we want to thank you for taking time out to join us today. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Hebrew, Choda Hafez, Russian, Ni Hao Ma, Chinese. Our health tip for today, I just wanted to note, is again that 20 minutes of exercise every day is a huge deal in terms of health, mental health, and all other types of health. So we wanted to re-emphasize that from one of our doctor consultants. Have a great day. Bye for now, and best of luck in this marketplace.